The Property Pod. Welcome to The Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
Hello and welcome to The Property Pod, South Africa's premier property investor podcast. My name is Suren Naidu, and on this Moneyweb weekly show, we gain insider insights from leading CEOs, analysts, developers and entrepreneurs in South Africa's expansive property industry. It's December, the holiday season is here, and we have an innovative group featured on the podcast today. It's called Neighbourgood. That's right, Neighbourgood, which is making a name for itself in the hotels, co-living and co-working space, not just in Cape Town, but internationally, with recently launched sites in the USA. We have Neighbourgood's co-founder and CEO, Murray Clark, speaking to us about the business and its growth now. Murray, welcome to the Property Pod.
Hey man, great to be here and thank you for having me.
I understand Neighbourgood was born out of the pandemic during Covid-19 in 2020 as a startup. Tell us how it all started and what exactly is Neighbourgood doing in the property and hospitality space?
So in July 2020, when we were all at home making our fourth or fifth banana bread and we were thinking about what the future meant for us, I think myself, my two co-founders, St. John and Kim, who's also my life partner, really thought about what the built environment needed to look like in the future. And Neighbourgood was that answer for us. It was in the midst of the COVID epidemic. And Neighbourgood is really the evolution of where we see the built environment going. It's an all-access, collaborative living workspace and a communities platform that combines all three of those things into one all-city passport. You can stay with us at any of our apartments across the city and you get access to free workspaces, health and wellness, a whole series of community events that make life really interesting. And I think obviously in the middle of COVID, community that was something that was almost entirely absent, and that crave for in-person community events was probably at its highest. And that's really how we all got started. 20 units at the top of Cape Quarter Village. If you know Cape Quarter, it's in the Waterkant of Cape Town. We took over from a hotel operation that wasn't working, and we were able to convert it to this really cool co-living space that we were able to let up within, I think, what was 45 days. And slowly but surely, we've been able to add circa 1,000 units across our platform, across 22 buildings in both living and working spaces. And last year, we were lucky enough to take this step into the US, which has been a big part of our growth journey and will continue to be. So that's a little about our story. Our mission is to bring good to neighborhoods and to create connected places where everyone feels like they belong. And yeah, we're just really having so much fun along the way. A big focus for us has been on adaptive reuse rather than ground up construction. It's taking assets that no longer work, so old hotels, guest houses, traditional offices, and really reimagining what they should look like in the world that we now live in. And turning them into really culturally relevant spaces that add value to the world that we live in now.
Thanks for that. What were you doing before starting up the company? Perhaps you want to share a little bit more detail because you've grown so tremendously on your backers and possible co-investors to make this a business, as it were, beyond the passion that I hear coming through.
So for my sins, I've been in the real estate space for the better part of 2 decades. I started off in residential property back in my hometown in Durban, where I was lucky enough to grow up. My late father was a building contractor, so I grew up around building sites and have always loved the possibility of being able to imagine buildings from nothing and then have the opportunity to build them. For a long part of my career before Neighbourgood, we built convenient shopping centres in rural South Africa, across the country, working for tenants like Boxer, Shoprite, Pick n Pay, and various others. Over that time, I think I developed an order of about 45 shopping centres in partnership with different people. And that's really where I learned the beginning of sort of ground up construction and community related development, especially given a South African context. That's what rural retail is. You really learn to understand how to negotiate land leases, property deals with community in mind. And that's what I did for the first 20 years of my property career. And this is, I'm hoping, how I'll finish the next 30.
Well, it's something unique. And your co-investors and backers, do you do it on a case-by-case basis based on sites?
So up to date, everything has been self-funded. I have slowly disinvested from convenience retail over a period of time and reinvested almost all of my balance sheet into building Neighbourgood across our portfolio. We own about 60% of our buildings. So most of my balance sheet is in what we have built. Together, our portfolio is an order of about R500 million in Cape Town. Of late, we have secured investment from a really great group of guys who, as human beings, are the best possible people we would want to be invested with. Yes, obviously, it was amazing to have a commitment to a check. In total, it was $2.3 million for a 30% stake in our business. And there's some commitment to property capital as well, which is specifically going to be allocated to the US. But outside of the actual check itself, which will be used for growth in the US, it's more about the people around the table. For me, that was a much more important decision. And I feel like we've struck gold there.
So you've gone beyond a startup now, even though you're still getting some funding.
Yeah, so we've got 200 people across our 22 buildings. Cape Town is primarily a hospitality operation. So you could stay with us from 1 day right up to 12 months. Our stays vary in length, but it's predominantly for digital nomads, remote workers, and people who are coming to Cape Town in that sort of 1 to 3 month space. So right now we are incredibly busy because we're in the middle of season. But the US portfolio will be predominantly long-term or medium-term rentals across both house share and multifamily. So it won't just be one or the other. It will be a combination of both. And that's probably the most exciting part of what our growth trajectory is going to look like. Having just returned from San Francisco and Brooklyn, it is a behemoth of opportunity, and it's very, very interesting being in the US, and I'm looking forward to what the next chapter of this journey means to us.
Well, you've shared, my next question was going to be on target market. So you've covered that, but you talked about 22 sites. Is that the full size of the group now? And is Neighbourgood still purely looking at Cape Town in South Africa as the country's nomad and semigration hub? Are you looking at potentially expanding beyond Cape Town? We'll get to the US in a minute.
So Jozi and Durban are both on the cards. In South Africa, it's really about redefining what the future of multifamily looks like in what we see as a very aspirational category. So we have 22 buildings across Cape Town City. We're looking at Rosebank, Menlyn, Linwood, and Jozi, Parkhurst, and Durban. We're looking at Umhlanga. We're looking at Florida Road. So we're looking at a selection of sites that we feel work for our model. And it's really, again, reimagining what the future of living looks like and layering it with incredible community experiences, free access to workspace, health and wellness, and a community of good people. And remember, when you stay with us, you've got access to all of our sites. So we're trying to not think of product within the four walls of physical space, which is obviously how traditional landlords see buildings. When you sign up with us, you have access to all of the buildings across all cities, and we are very intentional around how we secure buildings. The density model is something that has been important from day one for a whole bunch of reasons. It makes it easy for people to move from one building to the next and actually really appreciate the benefit of doing so. As an example, in Cape Town, we've got 5 different workspaces across the city, and you can use one today, another tomorrow, and then this evening you can join, a cooking class that we hold. You can come visit the beach with us tomorrow in a community event. So it's very much a community product with all of these layers as well, and an amazing room and apartment which suits your price bracket. Doesn't have to necessarily be, it doesn't all have to be aspirational. We've got something for everyone at every different price point.
Well, it's good to hear that you can experience the city fully, not just staying in one place. And tell us about the US expansion. When did you commence your expansion into the US? Because I was looking at your website and I see you've already got a few sites there.
Yes. So a little over a year ago, we were able to secure a portfolio of about 70 to 80 units that we manage in San Francisco's the Bay Area, which everyone knows so well, for Silicon Valley. And organically, we've grown over time. We have a really strong team on the ground. We moved one of our best asset managers, a chap by the name of Werner Zierman, to actually live over there. And he subsequently found a fiance, which has made life much easier for him and less lonely as well. We've hired some really great American people as well who are now part of the Neighbourgood story. And we've slowly but surely been able to secure additional management business. I think our portfolio is about 150 odd rooms and apartments at the moment in the Bay Area. We're actively looking to acquire properties. I think participating in the PropCo transaction is really important for us. We can either manage or buy assets. And again, buying assets is on a deal-by-deal basis. But San Francisco, very much like Cape Town and Brooklyn in New York, has a lifestyle appeal to it. Both cities, San Fran and Brooklyn, are some of the most expensive in the world to live in. So as a young guy or girl who's moving to the city, it's exceptionally expensive relative to the rest of the world. You do earn well, which is amazing if you work in either or city. It's also a very lonely experience. So you know absolutely no one generally speaking, when you move to a San Francisco and you're starting a new job at Facebook or Oracle or wherever it might be, perhaps in New York, you're starting a new job in Wall Street or something like that. Neighbourgood helps solve for that. So you can stay with us if you're moving to the city from 1 to 6 months. If you're getting set up, if you feel like you want to stay longer, that's amazing as well. You're joining this community of a few thousand people. So it makes you feel like you're at home. There's like community dinners, a whole bunch of value added things that make you feel like you belong, which is again our mission, to create these spaces where everyone feels like they belong and you can really thrive in that space. So it's not just a functional Airbnb booking where you have to like really search far and wide to find any sense of place. We take care of all of that for you, and then connect the dots along the way. And hopefully in the process of doing that, on the property side of things, because of the market we're in, we're able to buy really well at cap rates that make sense, and then leverage our sort of creative DNA to help move the needle from, in-place caps of 5.5 to north of 7.5 on cost, which is something that we're in the process of doing. I know in the US it's easier said than done. We don't take much development risk. We like being able to turn assets around in 90 days as much as we can. So it doesn't take us a long time to renovate our spaces. We have a full in-house design team. We really think about, can we move the needle fast? And can we leverage the density model to drive a better value proposition for our customers? Again, because every building that we're able to buy or add on, our members have access to. So the more we can create density in these cities and build this really beautiful collection of 40 or 50 buildings in San Francisco, so the value proposition gets better for our members. And we're seeing heaps of potential there in both the multifamily to co-living conversion and the SRO to co-living conversion. SROs were developed for a community of people who got back from the war in the 1940s, essentially as an asset class, soldiers who came back to the city. And it was, again, a space for community for these young men and women who got back from war back then. And now it's become a really interesting asset class that's exceptionally hard to manage. It's very price sensitive, shared bathrooms, shared amenities, and it's quite an unsexy asset class at the moment. If you walk SROs, most of the time they're fairly unkept. They're run by mom and pop shops. But we see our ability to be able to either acquire or manage them, organize it, brand it correctly, monetize the common areas, make them look incredible, design a customer experience that really makes sense, and then move the needle from $900 a room to say $1,400 a room, which is still exceptionally low for the Bay Area, and hopefully in that process drive better property value as well.
What other locations are you looking at globally? Is the US pretty much your core focus outside South Africa at the moment?
So in time, we'd like to be in 10 cities over the next 5 to 10 years with an average of 2,500 units per city. Our vision is to really have 25,000 units across 10 of the world's best cities. But right now we're leaning into focusing on the US. We have some amazing people on the ground in Brisbane and Melbourne. We have some incredible people on the ground in London, so we think that's very interesting. But in this process that we're in at the moment, we need to lean into doing one thing well or two things well, and that's getting New York through Brooklyn and San Francisco right. Just because I think there's this moment in time over the next 18 to 24 months where we feel like the US is on sale because of pressure in debt markets. It's not normal to see the opportunities that we are seeing, and we're lucky to have a brand that can capitalize off that and a model that can capitalize off that. And the US, I mean, I'll be preaching to the converted. It's just this massive, deep, vast market that offers so much availability of, just absolutely everything relative to where we've come from. So that's been an interesting learning experience for us to understand how deep the capital market is. And I think we've got a product that hasn't been seen in the world, that this all-city living workspace and experiences product that really thinks about living in an entirely different way in the world's biggest asset class, multifamily, which by and large is a very traditional, boring industry, but it carries this substantial weight. And in the US, there's this institutional weight behind it that makes it really attractive. And the density model helps us be more efficient in the way we operate, because we can cluster manage. Again, we can drive a better value proposition for our guests. And we can move the needle that 200 to 300 bips in income, in NOI, within a short period of time without taking development risk at all, which is important for us.
You mentioned multifamily several times. Is multifamily mainly linked to the US? Because In South Africa, we've recently seen the establishment of the Multifamily Association of Property Companies. Uh, is South Africa also a multifamily opportunity? The likes of obviously it operates differently, but we've had a couple of listed players are dabbling in it, in addition to private players like Africrest.
Yes, I think, sure, there are some great multifamily companies that are, companies like IHS. Um, there are just some incredible people doing good work in the space. Africrest is definitely one of them. I think for us, that is the future in South Africa. This multifamily asset class, but layered with community, workspace integration, health and wellness, lifestyle related value adds that are super important in the world that we live in. We think that hospitality within a Cape Town setting is an important skill set to have, because it is such a tourism market. But for scale and institutional scale, we want to really move towards embracing aspirational multifamily, Neighbourgood across Cape Town, Jozi and Durbs, and building buildings that speak to our product, which again is like quite aspirational. And then working with big institutions to help solve, liquidity issues at the asset level, and hopefully co-invest with us into assets. We're looking at some ground up construction work for the first time in a long while. We're not seeing the same amount of deals that we were seeing just after COVID. We were lucky enough to have that moment in time where we were able to acquire a number of buildings. We're not seeing the same opportunities at the moment. So we're working with property developers to partner in ground up construction projects, to brand Neighbourgood multifamily spaces of between 100 and 200 units with workspace and a whole bunch of other things that I think make the experience of living there better. So 100% on the cards, and for scale, it makes a whole lot of sense. And I think that's where the market is. This rental space of between 5 and 15 grand a month seems to be where most growth will come in South Africa. And I think there's some amazing people doing good work there, and it's nice to see it gaining momentum.
Housing is a key issue. We actually interviewed someone from Nedbank about the IHS conference in November. So it's becoming the likes of the World Bank's IFC and others are dabbling in financing that space as well. Murray, before you go, you shared a lot, but a little bit around what differentiates Neighbourgood in the market, as it were. It seems that you've caught on to a trend here, and you have a sort of first mover advantage in the space. So you have grown quite tremendously since being established, or the company being established.
The thing is, the asset class that we're playing in, Suren, this multifamily space, is just the biggest in the world. So I think for us, as much as we have first mover advantage in certain spaces, it's not a one company wins all sort of scenario. It is just so big that 10,000 companies like us could exist in the world, and all of them could perform. And I think, as you say, housing is just so important. I think what we want to do really is just make access to really cool, collaborative, community-centric living in workspaces normal. And for us, the creation of this all-city model, which connects those three layers, living spaces, working spaces, and community experiences, is something that hasn't been seen before in the world. And that for us has really created USP in Cape Town, being able to connect the dots, and then layering that with a series of values that are important to us. Living with kindness is really important, making sure that we actually care about our members. Having fun, it's also something that's so important to us as a company. We are on this earth for a short amount of time, and the work we do is really important, but we also want to breathe, a spirit of fun into everything that we do. And just absolutely everything and how we show up every day, sustainability, how we're going to leave the world when we leave. What does that mean to us all? And that for us is more important than just achieving scale, is helping companies see what we do in the hope that maybe some sort of values rub off on them. It doesn't have to be necessarily in just properties. Again, we business is this very cutthroat space, and I feel like if we can live life with a whole lot more love in how we operate, there's no downside at all. So I'm excited about the future. I'm excited about building 2,500 to 5,000 units in the US over the next 5 years, going into new markets like London, Australia, and replicating what we've done really well in Cape Town, and having lots of fun doing that with good people and adding value to the multifamily sector in a way that hasn't been done before. So more soon, and we'll keep you posted with how we do.
Very exciting stuff there. You can hear the passion coming through, as mentioned earlier. Murray, we have to leave it there, but I appreciate your time on the podcast. That was Murray Clark, co-founder and CEO of Neighbourgood.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter @Suren Naidu for more of his property industry content and other business stories. The Property Pod.